Hello, my friends. If you're a mortgage loan officer originating Fannie Mae HomeStyle, Freddie Mac CHOICERenovation, or a private renovation loans, I want to ask you a simple question. Who's actually looking at the entire property before you finance the renovation? Not just the contractor, not just the appraiser. I'm talking about someone looking at the property from a renovation and property condition perspective and asking, what problems could affect this property after closing? That is where a professional experience with a FHA minimum property requirements and renovation consulting can bring significant value, even when the loan isn't FHA. Today, I'm going to explain why. These loans are not FHA loans. First, let me make something very clear. Fannie Mae HomeStyle and Freddie Mac CHOICERenovations are conventional renovation products. Private renovations loans are governed by their own investors and lending requirements. So I'm not suggesting that an FHA property requirement automatically becomes requirement on a conventional loan. They don't. However, what I'm talking about is using inspection discipline and property condition knowledge developed through FHA renovation consulting as an additional risk management tool. There is a big difference. The question isn't, does FHA require this? The better question is, can this inspection process help us identify problems before they become expensive problems? For renovation lenders, I believe the answer can be yes. The contractor's bid doesn't tell the whole story. Let's use this example. Your borrower purchased a property and wants to spend $70,000 renovating the kitchen and 2 bathrooms. The contractor provided a detailed estimate for cabinets, countertops, flooring, electrical, plumbing, fixtures, and labor. Everything looks great, but who's looking at the roof? Who's checking for obvious drainage problems? Who's identifying deteriorating exterior components? Who's looking for potential unsafe electrical conditions? What about damaged stairs or missing handrails? What about moisture intrusion? What about significant deferred maintenance? Those conditions might not be included in the contractor's proposal because the borrower didn't hire that contractor to evaluate the entire house. The contractor was asked, how much will my kitchen and bathroom cost? And that's where the contractor price. That's not necessarily a contractor's problem. It's a scope development problem. This is where FHA experience becomes valuable. As an experienced FHA renovation consultant, I have been trained to think differently. Instead of only asking, what does a borrower want to renovate? The consultant will also ask, what conditions exist throughout this property that should be addressed? That mindset can be valuable on a conventional renovation loan. The consultant can potentially identify conditions involving health and safety, structural concerns, roofing, electrical systems, plumbing, heating, exterior deterioration, drainage, moisture, stairs and railings, and other property defects. Again, that doesn't mean we're converting a HomeStyle or CHOICERenovation into an FHA loan. We'll use an experienced renovation professional to help identify properties and construction risk. So why should a loan officer care? Because discovering problems before closing is usually better than discovering them halfway through a construction process. Imagining approving a $100,000 renovation. Construction begins. Then the contractor discover another $15,000 or $20,000 worth of necessary work that wasn't in the original scope. Now everybody has a problem. The borrower asks, where's the additional money coming from? The contractor says, that wasn't included into my contract. The lender asks, why wasn't this identified before closing? And suddenly, everybody looking at the contingency reserves. A more comprehensive property condition review can't eliminate every unforeseen condition. No inspection can. But it can potentially, I should say, identify visible deficiencies earlier when the lender and borrower still have the opportunity to properly structure the renovation budget. The consultant isn't replacing the appraiser. That's another important distinction. A renovation consultant is replacing the appraiser. The appraiser have different responsibilities. The contractor has a different responsibility. The underwriter has a different responsibility. The home inspector may have another responsibility. Think of a renovation consultant as helping connecting the dots between existing properties, conditions, proposed renovations, construction budgets, and project completion. That's particularly valuable when the lender is making a loan based partly on the property expected conditions and value after renovation. So I know what you're asking. What about the consultant fee? Now we're getting to a big question. Why should a loan officer use an experienced independent renovation consultant where companies such as other third-party services may provide service at a lower fee? Let's be honest, that's a legitimate question. And the answer shouldn't be because our fee schedule says we're worth more. That's not enough. The consultant has to demonstrate additional value. The conversation should be, who is the lender actually receiving for the fee? If you're paying more and receiving nothing more, the lower cost option probably wins. But if the additional service includes a more comprehensive property condition review, a detailed scope development, repair cost analysis, contractor's bid comparison, identifying of missing scope items, construction risk observations, draw inspections, change order assistance, and direct access to an experienced consultant, then we're no longer comparing identical services based solely on price. We're comparing levels of due diligence. A $300 savings can be very expensive. So let's put it into this perspective. Suppose one provider saves a borrower $300, $400, or even $500 on the consulting fees. That's meaningful. Borrower's cost matters. But now let's compare that savings against a $10,000 scope omission, a closing delay, repeating underwriting conditions, an inaccurate construction budget, a contractor's dispute, or a renovation that runs out of contingency. The cheapest consultant isn't necessarily the least expensive outcome. At the same time, the more experienced consultant is automatically the best. So the lender should be asking, what am I getting for the money? That is the right comparison. The opportunity for HUD consultants. This creates a major opportunity for experienced renovation consultants. Don't sell yourself simply as, I'm a HUD 203K consultant. And don't expect conventional lenders to pay higher fees simply because that's what you're accustomed to charge on an FHA business. Instead, demonstrate your value. Position yourself as a renovation risk and property condition specialist. Show the lender how your process helps evaluate the existing property condition, the borrower's proposed improvement, the contractor's scope, potentially missed repairs, cost reasonableness, construction risk, draw process, final completion. Now you're providing something a loan officer explained to management, underwriting, and the borrower. So, in closing, this is my message to renovation loan officers. When you're originating a Fannie Mae HomeStyle, Freddie Mac CHOICERenovation, or even a private renovation product, don't automatically ask who has the cheaper consultant fees. Ask, what level of property and construction due diligence does this transaction need? For a simple renovation, a streamlined, lower cost service may make perfect sense. But when you're dealing with an older property, substantial rehabilitation, structural work, major systems, complicated contractor scopes, or a large renovation budget, an experienced HUD renovation consultant can provide another set of trained eyes. And here's the key. We're not applying FHA financing requirements to a conventional mortgage. We are talking the property condition discipline developed through FHA renovation consulting, and ask whether that expertise can help conventional lenders make better renovation loans. Because saving a few $100s on the front end is valuable. Don't get it twisted. It is. But identifying a $20,000 problem before closing can considerably be more valuable. For HUD 203K consultants, that's the opportunity. Don't compete solely on price. Compete on the problems you help lenders identify before those problems become expensive. If you're a loan officer, renovation lender, consultant, contractor, or underwriter, I'd like to hear your perspective. Would you pay more for a comprehensive property condition and renovation risk review? Or do you think that streamlined, lower cost model works better? So please leave your thoughts in the comments and subscribe to this channel for more discussions about FHA 203K, HomeStyle, choice renovation, and the renovation lending industry.